Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Apple report for Tuesday, January 9th, 2024. Let's take a look at the charts, talk about the big picture, work our way into the day itself. I can go all the way back to May here when we settled above the 163.89 to 165.31 channel resistance, now support at that time, indicating this long-term channel top at 235.03 as a 3 to 5 month target. At the time, it seemed realistic until the July high. It is still considered a longer-term objective above the low to mid 160s, and in fact, it was coming off of the support area on a retest following the July high a few months ago that we then rallied significantly and closed above this descending channel top that this week is at 180.15. We did test this channel top last week, and it was considered a 3 to 5 week objective, as you recall, following the settlement below, in part, this channel bottom. It took less than 2 weeks. It took, I think, 7 or 9 days to fall into the low 180s, and the low 180s has so far held. And it is considered, in fact, you could call it the upper 170s, low 180s, because on the daily chart, that same structure is at 179.63. In any event, it is the 179.63 to 180.15 area that can absorb selling through February and even into later year. And above which, I'm going to jump to the short term right now, 187.60 in reach. I'm going to say today, the 191.92 descending 2/3 speed line considered, I've been seeing a 2 to 3 week target, and I think that was true until Monday's volatility, and I think that has narrowed that to within, I'd say, by the end of next week or sooner. In fact, it could be by the end of this week. So upside today, 187.60. Now, we did have this former channel bottom, if you recall, that we were considering to be our session containment level. That's at 186.72 today. We've raised it to 187.60. 3/8 upside Fibonacci over the last several weeks. It's also in line roughly with this old early December low, able to contain session strength. We might fall away from here for several days following a test of 187.60, but closing above 187.60 would be consistent with having come off of this long-term support area in the low 180s. And if we close today above 187.60, we should, over the next several days, possibly tomorrow, test this descending 2/3 speed line that is based in part on last Friday's low, also using the December high. It is trend defining over the last several weeks, may well contain buying through next week. We could fall away from here back into the low 180s again within a week or two of testing 191.92. But if we close above 191.92, I'm looking for the 205-210 region. I don't have the exact number, but I will get to it here, especially if we close today above 187.60. I've been describing it. If you take a trend line off the October low and come across here to last week's low, and construct a parallel formation off of that, that'll take you to around 203, 205 now, and climbing. And if we close above 191.92 over the next, few days, over the next couple of weeks, this could be a 2 to 3 week rally. I'd say by the end of February anyway, where we could actually reach around 210, that rising channel top. So that is the big picture. And I'll go out on a limb and say that holding above the low 180s long-term support will keep this 210 area in, let's say, in reach over the next couple of months, closing above 191.92 within 3 to 5 weeks. It's about as simple as that. But for right now, we could fill this area out. Buying the low 180s, selling the low 190s, this area narrowing, 191.92 dropping at a more aggressive pace than 179.63. Let's talk downside today. I do have, where are you? I thought I did. Let me see. You can't see what I'm doing, but I'm combing through the charts. By the way, this is a downloadable PDF, as you're well aware. If you go to the website, you can see exactly what I'm looking at. 182.76 is the high of the low from last Friday. Solid intraday support level, buyable support level, and above which, that 187.60 Fibonacci in reach today above 182.76. Now, if we break or open below 182.76, the low 180s is attainable today. I will say, though, if we close below 182.76, we should tomorrow retest the 179.63 to 180.15 area, where once again we can bottom out for the week, through February and even into later year. So longer term traders and near term traders, I don't think should be, how should I put it, short the market as we fall into the upper 170s, low 180s. You want to get long or be out entirely, one of the two. But if we do close below 179.63 today, we should tomorrow test 176.50, which is an inside channel. And that could contain selling possibly for the balance of the week. But I will say, as I've said before, that if we close the week Friday below 180.15, the market sets up for a 3 to 5 week sell signal back into the low to mid 160s, where we could bottom out through the rest of the year. I'm going to leave it at that. I think I've said all there is to say. Please click like, share, subscribe. Check out wickedstocks.com for that 5-day free trial. We put out a couple stock picks on Monday, one on Adobe, the other on Bunge, which is an oilseed processor, global large cap. 2 stock picks. You can actually see those if you check out our 5-day free trial. All of our triple Q and SPY analysis on every single day that we put those out. You can check it out all the way through the rest of the week. And if you don't like it, you can bow out at no cost to you whatsoever. But I suspect you might want to stick around if you check out what we offer every day at wickedstocks.com. That's all I've got for Tuesday's Apple Report. I'll be back, of course, tomorrow with Wednesdays, and you have a great evening.